What matters is what my trade trend tail signals, 3 factors, multi-factor, okay, multi-duration on price, volume, volatility are saying, okay? So that's why it's different in terms of how it's calculated at bare minimum, and what it's saying is very important. Now, when you have something that's bullish trade, trend, and tail, it's called a bullish formation. When you have something that goes from bullish trend to bearish trend, that's called a bearish phase transition. Be very careful of those. Those will be your best shorts. When something goes from bearish trend, bearish trade and trend, to bullish trade and trend, that's called a bullish phase transition. You can look up what a phase transition. They happen in life all the time. They happen in markets all the time. So the biggest calls that you're going to have, or the biggest winners you're going to have in the prize, are things that are breaking out on a trending basis, and the ones that just came from bearish that have gone to bullish. Because those are the things that not enough people are long yet, and to Ami's point, people have to chase them. Let's just jump into that. Risk ranges, okay? Risk ranges, RRs. So if we have something like, let's use a live example on copper, which we publish daily in our risk range product on the on the commodity price, okay? On the prize, you're not buying, copper futures, you're buying CPER, okay? So something like that, the risk range, so let me load it so you have a real-time price, volatility and volume signal here. So the low end of the range on this, on CPER, is 26.35. 26.35. And the top end of the risk range on CPER is 29.74. 29.74. Okay. So here, I buy. I don't go all in, 4% of my capital because it's a commodity, as soon as you see the button hit. You do things incrementally, okay? So if it were to go to 26.25, 26.15, 26 anything, 26.15, 26.03, are these bad things? No, unless the trend breaks for copper itself, which is around 390 per pound. It's got a long way to go. So as the price goes closer to the low end of the range and through the low end of the range, you get bigger. That's when you get bigger. That's when I'll get closer to a 4%, my max position in copper. But today, I just bought 50 basis points. I like to buy 0.25% or 0.5% of my hard-earned capital at a time deployed into something. Now again, you have, I believe, they have 6% max. So you guys might be able to get all wild and crazy and buy 6% copper. And guess what? You might win the competition doing that. You're not doing it with I would not violate my own rules because I never do. Define what, again, once we get beyond the prize, what is your max and minimum position by asset class? Why do you have a minimum? Because if we get to 4% copper, if I have a max position, that's max for me, max, and this number goes to here, that copper goes to here, first of all, it's going to be more than 4% now through price appreciation. Now I got to sell at least 25 to 50 basis points just to keep myself in check. When I start selling it more aggressively, let's say it took down to, so I'll take that down to 2%. If you take it to like 0.5% and copper just keeps going higher and higher and higher and higher like natural gas just did recently in recent months, well, now you're missing the last part of the move. Again, not a problem that's unique to you. Paul Tudor Jones always said the hardest part of the market to get right is the last third of the move, to the upside or the downside. So again, get used to making the mistakes that everybody else makes. Very difficult game. But again, I highly suggest you do things incrementally. Again, I don't look at all at the dollar amount anywhere in any account that I manage. I only look at what percentage of capital I am deploying. So it's basis points or percentage of capital at risk is the way that we talk about that. Okay, so at the top end of the range we sell, at the bottom end of the range we buy. So if copper were to go from 26, where it is now, to 29.74, it goes up $3, but does it 3 times, somebody who just buy and hold, they're not going to win the prize. Whereas somebody who does that 3 times is going to obviously make a lot more than the $3 move. So that's why we do it. That's how we use it. We're fading the market, which is a great thing to do. When the market's going down, we're buying. When the market's going up, we're selling.